Why should shareholders of Bob Evans give you at Sandell Asset Management essentially control of the board of directors of this company?
Yes, David. So we have been a shareholder for quite a while in Bob Evans. We see tremendous value in this company, and we've tried to engage with the management on a cordial basis, but they frankly ignore us completely. So what we've done here is that we're nominating 8 independent directors. Nobody from Sandell Asset Management is going on the board. So these are 8 highly qualified industry experts. The ex-chief executive of Arby's and Charlie's, Michael Weinstein, who bought Snapple, was a home run.
Sure.
We have the leading corporate governance expert in this country, Charles Elson of University of Delaware Weinberg Center. So he's the leader in corporate governance. The problem with Bob Evans is that there is no corporate governance. The board is a social club of country club cronies, basically, from Ohio. So one example is the board adopted a plan to move their headquarters from Ohio to New Albany. And Columbus, Ohio was willing to give them a huge tax break if they stayed. Instead, they spent $50 million of shareholders' capital building a kingdom, a castle in New Albany. I mean, David, do you think New Albany is a great place to invest in real estate?
I don't really know about the opportunities in New Albany, but specific to the arguments you've been making for some time have more to do with both the restaurant business, the real estate embedded in that, and the food business that they sell from stores and the like.
Right.
Now, they say, hey, we've got a long-term growth rate, a plan that will generate as much as 10 to 12%. We believe that we have a balanced approach to capital allocation. You know, just give us a break, Sandell, and we're going to implement this plan and create a lot more value.
Yeah, unfortunately, David, it's too late. The company has underperformed their peers by 130% in the equity market over the past 5 years, and they have a culture of corporate waste. For example, their operating margins are 500 basis points lower than the peer group, than the average peer, 40% below. And it's frankly very disappointing. Their stock price is trading at $47 right now. We feel there is $90 in value, and the real estate is worth $37 by itself.
I know, 90. Now, at the end of last year, I was reading one of your position papers. You were at 80. Apparently, it's moved up by $10, your analysis.
Right.
Why is that?
Yes, because our plan right now contemplates operational change. I mean, revenues, for example. The company has not capitalized on their Bob Evans brand name. They need to do that to drive traffic and same-store sales. They have a bloated overhead. I mean, there's 500 people in the headquarters. I don't know what all these 500 people are doing. They're certainly not driving shareholder values.